This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, I got my glass of water and 2 teas. I am ready for the next 60 minutes here on Bloomberg Businessweek Daily.
No wine?
No wine.
No wine, okay.
It's only Tuesday, Tim.
It's Tuesday and it's 2 o'clock, so yeah, maybe tomorrow after we hear from Jay Powell, you can take a drink.
Yeah, I mean, the Fed, as you know, everybody, welcome. It is Tuesday, September 16, 2025. Carol Massar, Tim Stenovec, live here on Bloomberg Businessweek Daily. Fed kicking off their two-day meeting. Today, we get that decision tomorrow. Stock investors, though, looking at my Bloomberg here, taking a little bit of a breather, and that's following a solid retail sales report here in the United States. We're going to get into all of this over the next hour.
Yeah, top of mind for us, the U.S. economy, monetary policy, and the makeup of the Fed once again in focus. Michael McKee down in Washington, D.C. He's going to be chatting with us in just a minute.
Katy Kaminsky is also going to stop by from AlphaSimplex Group. We're going to talk about U.S. rates this year, next year. What is she expecting in terms of Fed moves, or is it still TBD? So we'll get to that. And then, Tim, we're going to talk a little bit about investing in American infrastructure.
And by that, we mean a lot of data centers. But if you've been paying any attention to infrastructure talk over the past 2 years, you know that's what that means. The CEO of the $77 billion market cap REIT, Equinix, is joining us a little later this hour.
All right, first up, let's get to the trade. And ahead of that Fed decision tomorrow, here is Charlie Pellet.
All right. This time tomorrow, we will know for sure what it is that the Federal Reserve has done, and we'll be awaiting Jay Powell's news conference, 2:30 p.m. Wall Street time. Right now, though, we are looking at stocks essentially in a holding pattern, with the S&P down 6 right now. A little change. That rally hitting a wall earlier today, down 0.1%. The Dow down 120 right now, down 0.3%. Nasdaq, we'll call that flat on the day. The Mag 7 index up now by 0.5%. The 10-year 4.02%, with the 2-year 3.50%. Gold up $8 the ounce, up now by about 0.2%, $36.87 the ounce on spot gold, while West Texas Intermediate crude now up 2.1%, $64.65 for a barrel of WTI. Oracle shares, they're higher by 0.8% on word that negotiations over the future of TikTok are progressing, relieving some uncertainty around one of the software company's key customers. U.S. auto safety regulators have opened an investigation into whether some Tesla vehicle doors are defective, citing incidents in which exterior handles stop working and trap children inside. Now, this move comes only days after Bloomberg News uncovered a series of incidents in which people were injured or died when they were unable to open doors when Teslas lost power, particularly after crashes. Tesla shares, they're up now by 2%. Recapping, S&P lower by 0.1%. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So a lot going on, and certainly a lot coming out of investors still when it comes to some of the economic data points. We did get an update on U.S. retail sales. It showed an American consumer that appears to be in good spirits. Not so for U.S. home builders. Their sentiment stays low despite a drop in mortgage rates. You had U.S. industrial production barely rising in the month of August. And then, of course, there is the Fed, tomorrow's rate decision. There's also President Trump's bid to fire Fed Governor Lisa Cook from her post. That action blocked for now, but it ain't over, it seems. And then you got the president economic advisor, Stephen Miran. He's on his way to joining the Fed board. He should be there, I would assume, after the Senate confirmed him to the post in a vote last evening. So let's get to it. The economic backdrop, the Fed preview. We head to Washington, D.C. Bloomberg TV and radio, international economics and policy correspondent Michael McKee joining us. Mike, let's start with Lisa Cook. She's involved in this Fed decision, and yet the president still seems to be trying to get her off the Fed. How is that happening, and how might still some legal actions impact anything she does at this Fed meeting?
Well, it doesn't look like anything's going to impact what she does at this Fed meeting because she's already there, and we have not heard that the White House has actually filed its appeal to the Supreme Court, so we're not expecting any immediate moves from the justices that would interrupt this meeting. It's probably something that will play out after the meeting is over, but she is at the meeting, the Fed confirmed today, as is Stephen Miran. They may be sitting next to each other, we're not sure. And so whatever happens is going to happen. At this point, the legal stuff is sort of off the radar for 24 or 48 hours.
So because she's there, Mike, I think it's worth talking about her views and what she would talk about potentially, given what you know about how she thinks about monetary policy right now. We're not in the room. Well, obviously, we won't get the transcript for years. But what is the conversation that you think she is having right now?
Well, you're right, Tim. Each one of the members of the Open Market Committee gives a presentation on what they think the economy is doing and what the monetary policy should be for that. And in her case, she has been relatively dovish over the years, but generally sides with the chair. And of course, the Fed has raised and lowered interest rates over the past 2 years. So her time on the Fed, she hasn't really made an independent mark. And nobody's really expecting her to do so at this meeting. The feeling is she'll vote with Powell to cut rates 25 basis points. So it isn't going to be anything that changes anybody's policy minds or anybody's views of what's going to happen to the economy. But as a labor market economist, they'll certainly be looking to her for some thoughts on where we're going with the labor market, given the rise in unemployment and the fact that we're hiring almost nobody these days.
All right. Well, I'd be an idiot if I don't follow and say, what does she say about the labor market and where things are going?
She hasn't said a whole lot. She doesn't speak all that much, but she has suggested that the labor market is not as healthy as it has been.
Hey, one thing I do want to ask about, okay, so she's relatively dovish, often sides with Fed Chair Jay Powell, but Stephen Miran, right, he's kind of the wild card, and I'm just curious, are we going to feel the imprint of his presence?
We're not going to feel the imprint of his presence either, except that he might dissent if the Fed does a 25 basis point cut, and he might call for a 50 basis point cut, because that seems to be the reason he's been sent over to the Fed by Donald Trump. And the reason it sounds somewhat suspicious is because he's keeping his job as chairman of the Council of Economic Advisors, just taking what he calls an unpaid leave of absence. So he's going to be sitting in on the Fed meeting and voting on monetary policy while still being employed by Donald Trump. And so there's a lot of suspicion about what he's going to say, what he's going to do, what kind of positions he's going to take. And it's probably going to be on him to prove that he's actually independent if he wants to do that.
How does that work? How do you take a leave of absence from a job and take a new job completely? I understand the idea of maybe not getting paid by one role and while you take this other role, especially because it is, not a full term that he was sworn in for. It was the remainder of a term. But how does that work from an independence perspective?
Well, it doesn't work from an independence perspective if you're talking about impressions, because obviously it looks bad. We don't know the exact legalities of taking an unpaid leave of absence from a government job, but the Federal Reserve Act says that governors cannot have any other employment. Now, does that mean any other employment that is full-time paid, or does it mean that you can get away with an unpaid leave of absence? Nobody's really challenged that. That's not gone to court, and I don't know that it will, but it is going to be an interesting question. And I think one thing that gets lost here, I just want to mention so that you have it on your radar screen, if his term ends in January as expected, and the president doesn't appoint someone else to take the seat, Miran can stay as long as there is no new appointee. So he could be in the situation that many Trump cabinet officials were in the first term and serve as an acting governor for an unlimited amount of time, basically.
I guess what I'm wondering when we talk about independence, Mike, and who knows what goes on behind closed doors, right? In terms of members of political office. But I mean, do we assume that members of the Fed, they're not talking to members in the White House on a regular basis? And I mean, I know I'm jumping to conclusions, but I mean, or are we jumping to conclusions that there's kind of now someone who is friends with the executive branch and friends with the president, that there's likely to be kind of a direct, potentially flow of information from the Fed and what's being said internally to the White House because Miran's now a member of the Fed board?
Well, it's a bit complicated.
And is that a problem even?
It could be a problem. It's a bit complicated because this is Washington, and everybody in Washington knows everybody in Washington, and they all go to the same parties and that sort of thing. So they do have contact. Now, in the past, Fed chairs and members of the Board of Governors have taken pains not to be seen talking to administration officials on any kind of regular basis. Jay Powell's only met with Donald Trump once, and I think that Powell and his predecessors in office, Janet Yellen and Ben Bernanke, did not meet with Joe Biden or with Barack Obama very often, if at all.
Right.
They do meet with the Treasury Secretary on a weekly basis, but they don't meet with anyone else. Now, there have been criticisms of people from both parties of a revolving door where they go back and forth. Lil Brainerd went from the Fed to the White House. Austin Goolsbee was in the White House and now is on the Fed. So there are certainly questions raised about how cozy the two sides can be.
Hey, one last question. We all know about the dual mandate of the U.S. central bank. Stephen Miran, though, cited a third mandate that it must also pursue, and this is the Fed, moderate long-term interest rates. And when that happened, he said this, chatter lit up bond trading desks as analysts debated what it all meant. The third mandate said to be a long-forgotten part of the Fed statute in full. I've been doing this a fair amount of time, but you're the Fed expert. What do we need to know about that, just quickly?
Well, it is part of the overall mandate, but it flows from the other two. The feeling has been at the Fed that if you have maximum employment and stable prices, you will have moderate long-term interest rates because the markets decide that the economy is in good shape. And the worry is that if the Fed tried to deliver moderate long-term interest rates, they would have to do something to interfere in the markets, a more of a QE type of situation where they would buy longer-term treasuries or sell longer-term treasuries. And the markets don't want that. So it's just been kind of left to the side for these many years.
All right. We're going to leave it on that note. Listen, Mike, thank you so much. Well set up, certainly, for the Fed decision. That is, of course, our Bloomberg TV and radio international economics and policy correspondent, Michael McKee. Mike will be in the lockup, the Fed lockup, tomorrow when we get that Fed decision at 2 p.m. Wall Street time. The expectation is that we will get that quarter point cut in rates. Long time in coming and expectations. The market, though, pricing in some more, although we know in conversations, Yelena Shaletyeva that we spoke to from the conference board yesterday talked about, I think, was it 5 in total, including tomorrow's meeting. So there are other folks that said TBD, the Fed's going to be data dependent and have to watch things very closely. And
right now, in the equity market at least, not a lot of activity. Potentially, seems like investors and traders waiting to see what happens with Jay Powell tomorrow. The S&P 500, little change, but down close to 0.1%. The NASDAQ flat, the Dow down 0.2%. In terms of what treasuries are doing, yields slightly lower across the curve, the 10-year at 4.02.
All right, everybody. And of course, we have been watching the markets right now. Just a quick check here as we just look at kind of a quiet trade here, lower across the board. S&P, call it just down about 5 points unchanged. The NASDAQ 100, a decline of about 17 points. Right now, Utah County Attorney Jeff Gray, he has been speaking for the last 15, 20 minutes, really laying out the charges against Tyler James Robinson, age 22, has been charged with murder in the death of the conservative activist Charlie Kirk. You obviously know the story, the reality, but the charges now being laid out, 7 counts. The most egregious, no doubt about it. Count 1, aggravated murder, which is a capital offense. The County Attorney Jeff Gray also saying that he will pursue the death penalty, filing a notice of intent to seek the death penalty in this case. In the meantime, Tyler Robinson will be held without bail in that Utah County jail. We'll continue to monitor and bring you any more details. But again, kind of going through all of the details in terms of the investigation that led them to the finding ultimately of Tyler Robinson.
I want to bring in Bloomberg News senior reporter Myles Miller, who covers Homeland Security and the FBI. He joins us here in the Bloomberg Businessweek studio. A lot to take in just now, Myles. What did we learn new in this press conference?
We learned that his parents are the ones who recognized him on television and really got this investigation moving. You know, after that 9 o'clock press conference by the FBI, his father recognized the gun that was shown as a gun that he purchased for him for Christmas one year. His mother called him, said, "Where are you?" He said that he was feeling sick, and the father encouraged him to come in. They take him to the Washington County Sheriff's. Looking through this court filing, you know, he talks with his roommate, who is his partner, and he said, you know, I hope to keep this a secret till I died of old age. I'm sorry. And his partner says, well, what happened? And he says, you know, were you the one who did it? And he said, you know, I thought they caught the person. And he goes, no, they grabbed some crazy old dude, then interrogated someone in similar clothing. I had planned to grab my rifle from my drop point shortly after, but then that side of town got locked down. So he's talking in detail about what happened in this case, and then you know it's all detailed in this complaint.
You know, for those who aren't familiar with this process, I mean, these complaints, I think Tim and I were kind of you know saying, well, the detail and all the information, but this is pretty typical in a case like this or any case. That's
right. You know, the prosecutors don't always detail every part of the investigation. Sometimes in the initial filing, it'll just be the charges. Certainly here in New York, if it's a grand jury thing, they'll just put the counts. But you have this prosecutor laying out in detail everything that happened, and they're hitting him with every charge imaginable. Just scrolling back up just to go to the charges here about what relate to this case. Aggravated murder, first-degree felony, which is a capital offense, which means life in prison or the death penalty. Felony discharge of a firearm, that carries 5 years to life. Obstruction of justice, 1 to 15 years. 2 counts up to 30 years. Tampering with a witness, meaning telling his partner to delete the text messages, or if they come to him, say ask for a lawyer, that goes up to 5 years, or 2 counts up to 10 years. And then violent offense committed in the presence of a child, meaning that some of these students in the college were under 18. That's up to a year in jail.
This is we learned this from Jeff Gray, Utah County Attorney. These are state charges. Does he also potentially face federal charges?
Yeah, so
completely separate from this.
Right. The Attorney General hinted at that yesterday. The FBI director on Capitol Hill this morning also hinting at that the federal investigation continues. It is likely that he will see the state case go forward and then be charged, you know, once this gets to a federal grand jury with some sort of federal charge. In cases like this, where the state charges first, the feds come in after, they'll do it concurrently. But what was most eye-opening is that they're actually going for the death penalty in this case. The Attorney General Pam Bondi saying yesterday in Utah they still have a firing squad there, just to show the contrast about what happened in this instance and what could happen to him.
How is it that something becomes a state case but also a federal case? How does that happen?
It depends on who takes the lead in it. You know, in this instance, Utah officials, law enforcement officials, were on the scene within minutes. Obviously, 6 officers from the university, but then the Utah County sheriffs came in as well. FBI came in to aid the investigation. So sometimes the states take it. In this case, the state took it first, but the feds are still very involved in this.
What I find pretty remarkable about this is even with all the manpower, the person power that the federal and state agents had, it was in releasing information. Of course, they gathered DNA and they were able to release a timeline. In the end, it was the family of this person who came forward.
Yeah, I think that, you know, in law enforcement, you see something, say something, one thing. You know, the reason why my friend who used to run, he was a chief of detectives here in New York, he used to say, I put a bad guy on TV every night, because it's that multiplier force that you put somebody on TV. Somebody may have seen them. It jogs people's memory. And I think I said this in the day after it happened. Somebody's going to have seen him at a gas station, in passing on their Ring camera, camera, and that is what led to this. But that's not to say that the investigative parts weren't helpful. Once they had that framework, right, they had already arrested him, then they could get into his phone, they could figure out that he's on Discord and all of that, and that has played a crucial role in this investigation. That's how they were able to get this complaint, because they've got all the text messages from him and his partner. You only get that if you are, in fact, able to do that investigative 10-page complaint here.
Hey, before you go, earlier today, we had a New York State judge dismissing first-degree murder charges against Luigi Mangione. This is obviously the individual who is charged with fatally shooting the United Health Group executive earlier this year. What do we need to know here?
Yeah,
is that a surprise?
It's surprising that prosecutors went for the terrorism charge. The terrorism charge came about after 9/11. It's specific for incidents that, there was an incident in Times Square a couple of New Year's Eves ago where a guy went up to cops and tried to stab and kill them. That can be used as a terrorism charge. It was a stretch for this. The judge in this case said that there wasn't enough evidence presented to prove that it was terrorism in this case. But of course, the murder charge still stands, and it's second-degree murder because in New York State, first-degree murder is reserved for cops, firefighters, people in the public service. It's different in this case, but it still, faces a long term in prison as well.
All right. So appreciate it. As always, Myles Miller, he is our senior reporter covering Homeland Security and the FBI, joining us right here in studio. Let's go back to the markets, get a check on the trading session. Here is once again Charlie Kirk.
Hi, thank you very much. We are looking at a down day. Do want to begin with a number of developing stories breaking in the past few minutes here. President Trump establishing an emergency board to investigate disputes between the Long Island Railroad and its unions. The LIRR is the nation's largest commuter railroad. The White House also issuing an order delaying that TikTok ban until December 16th. And President Trump said he spoke to Indian Prime Minister Narendra Modi in a move that offers to ease tensions between the two major economies. S&P 500 index right now lower, little change, down under 0.1%, down 366.11. Dow Industrials down 110, down 0.2%. NASDAQ just about flat on the day, down now by 2 points. We've got the 10-year yielding 4.02%, the 2-year ahead of the Fed decision 3.50%. Spot gold up $10 the ounce, 36.89, up 0.3%. And West Texas Intermediate crude up 2%, 64.58 for a barrel of WTI. President Trump has filed a $15 billion defamation lawsuit against the New York Times, accusing the paper of serving, quote, as a mouthpiece for the Democrats. The Times said in a statement the lawsuit has no merit. New York Times down 1.7%. Recapping stocks lower, little changed. S&P down under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie with the rundown on the markets, reminding us, of course, the Fed kicking off that 2-day meeting today. We get that Fed decision. We'll be all over it 24 hours from now. We'll know exactly what the Fed is up to. In the meantime, you've got a 10-year with a yield of about 4.02, 5-year note with a yield of 3.58, 2-year note with a yield of 3.50. Keep in mind, we did have a $13 billion 20-year auction today. Our Markets Live blog saying that there was pretty strong demand. So let's get to Tim, a trusted voice when it comes to the U.S. Treasury trade and what the Fed is up to.
Katy Kaminsky is Chief Research Strategist and Portfolio Manager with AlphaSimplex Group. She joins us from Boston. Also the co-author of the book Trend Following with Managed Features, The Search for Crisis Alpha. Katy, good to have you with us this afternoon. First, make the call about the Fed's, not just tomorrow's move, but also the move to the end of the year. We want to put you on the spot here. What do you think happens tomorrow? And then what do you think happens for the remainder of the year when it comes to the path of policy?
Oh, you love to do that. I get that. So I'd say 25 tomorrow, but that's consensus. But I do think we will get some more cuts later this year. And the market has definitely already been pricing that in, particularly in the futures market. What that means is that people are expecting this to be a catalyst, a start of a new regime, which is important.
Well, having said that, I was thinking about your background. You've got a Bachelor of Science in Electrical Engineering, a PhD in Operations Research from MIT. Yeah, you're super smart. We know. I'm just wondering, Katy, is it easier to kind of figure out Fed policy, the U.S. fixed income market right now, or is it easier figuring out a complicated electronic schematic? I'm just curious with all that's coming at investors.
I actually think it's equally as complex. And let me tell you why. Is right now is a very interesting time in history for looking at the Fed, and just the amount of dissent is actually is unprecedented. So we haven't seen 3 dissents since 1988, and you're starting to see a much wider range of views on the Fed itself. So I'd like to say that this is going to cause a much wider reaction, a range of reaction, or more volatility in the reaction function of markets once those decisions come out and we try to figure out what that means.
Is that dissent, in your view, political, or is it, representative of a lot of things coming out of investors and maybe some mixed signals?
Well, I think, there's clearly some political leaning in terms of that type of dissent. I mean, but just the fact that you have such wide range of opinions. And I think, like I said, we haven't seen this many dissents in Fed votes for decades. So it kind of suggests a new regime shift, a very different type of Fed to try to analyze. And everyone's trying to understand, are these dissents going to move to a new consensus, or are we just going to be in the same scenario for a longer period of time?
Do you think the Fed is independent right now?
I mean, I think, it's hard to have, nothing is ever 100% independent in Washington, as you guys already noted, as you all already noted. But I think the fact that, there's definitely influence coming from those that are appointed, that has a potential to make independence a little bit weaker than it was before. And that's definitely the market's sentiment on that. And the things that you see is there's a lot of concern over that. And that could put the bond market at risk.
So when you look at what are you now looking and thinking in terms of how low rates can go, Katy? I mean, we have talked with you throughout the last 3 to 6 to 9 to 12 months. And there's points where we were talking about 5% on the 10-year. We've gone below 4% on the 10-year. We're right now kind of at it. So I'm just curious, what's the smart thinking in your view when it comes to where U.S. rates trend?
So this is a very good point. We have seen more long pressure in bonds. We're starting to see trajectory towards lower rates. What I get concerned about is if we stay in the middle and we sort of have a smooth and steady ride down in rates, I think that may be something where no balance gets tipped. On the other hand, if we have a very aggressive move downward in rates, we could have some overstimulation. We could be at risk for inflation, and we could risk losing parts of the long end of the bond curve just due to investors being concerned about rates being too low and inflation being too high. So I think for me, it's coasting in the middle will give us a nice trend down in yields.
Wait, so did you give me levels? Did you give me
Not
numbers?
exactly, but maybe 3. I don't know.
Really?
Hopefully, I don't know. Maybe 1.
Wait,
depends on the time horizon, though.
Did you say 1?
No, I definitely didn't say 1.
Okay, but maybe 3. Are you saying 3 for like the 5 year?
3.5.
3.5.
Perhaps.
All along?
I mean, the 6-month SOFR contract is already trading at a 3.4. So, we could get there. I don't know.
What about when it comes to growth? Should investors be concerned about stagflation?
Well, I mean, I think stagflation is one of those corner cases where, if things are calm and we have a balance in terms of growth is strong enough to withstand, for example, tariffs, inflation, then we should be in an okay position. I think what people really get concerned about is sort of putting the pedal to the metal, right? So you basically cut rates too quickly, try to overstimulate, it doesn't work. And then suddenly inflated prices are there anyways. And so I think there is a concern because it is really sort of a very bad economic situation. It's not just low growth, it's low growth when the power of your purchasing power has gone down. And so I think we love to talk about it because it's sort of like the Armageddon of difficult scenarios.
Hey, I just want to get a couple headlines that are crossing the Bloomberg right now. Silver Lake and Andreessen Horowitz in a TikTok investor group. This according to the Wall Street Journal. The Wall Street Journal also reporting that TikTok's U.S. consortium would include Oracle, the TikTok deal would create a new entity and US TikTok users would be asked to shift to a new app. This is all according to the Wall Street Journal. This comes after we did learn a little earlier that the US has extended the deadline to sell TikTok until December 16th. The White House issued an order earlier, just in the last hour, on TikTok, extending that TikTok enforcement delay. Hey,
Katy, before you go, what are you watching out for most? We get a dot plot tomorrow. We've got a new member on the Fed board, Stephen Miran, of course, from the Fed, not from the Fed, excuse me, nominated by the president. So I'm just curious, what's top of mind? I feel like there's going to be a lot coming at us tomorrow.
I think for me, it's the dispersion in the dot plots. Do we see a much wider range, and how do we distill that information? And also the size of the cut, let's just be honest. Like, do we get a surprise? I mean, I think that is always an interesting scenario to think about, a 0 or a 50.
All right, gonna leave it out there. Always appreciate your time and such a timely interview at that. Katy, be well. Katy Kaminsky, she's Chief Research Strategist and Portfolio Manager at AlphaSimplex Group, joining us from Boston, Massachusetts. Again, 24 hours from now, we will be well into the Jay Powell presser and talking about all that he has to say. Hey, over the summer, one of the things that caught our attention, Bloomberg News reporting that the world's largest technology companies, so we're talking Microsoft, Amazon, Google, all of them planning to spend billions of dollars, more than $344 billion on capital expenditures, with much of it, Tim, going to data centers for AI models.
According to Bloomberg intelligence analyst Mandeep Singh, companies have, quote, basically tripled CapEx investment in cloud due to AI, with executives emphasizing the need to invest quickly to get ahead. Our next guest is helping those hyperscalers scale up when it comes to AI. With us in studio is Adaire Fox-Martin, president and CEO of Equinix, the nearly $76 billion market cap data center REIT. It trades under the ticker EQIX, down so far this year about 18%. Adaire, welcome. Good to see you.
Thank you so much. Thank you for having me.
Nice to have you.
So how's business?
Business is very good.
Like the best you've seen it?
Like we're in the middle of a very strong cyclical demand cycle for, the products and services that we offer.
When you say we're in the middle, help us understand how long that means of a runway there is to go here.
Sure. At Equinix, we see a very significant trend from the training of models in the AI economy that you refer to in your opening there with the hyperscalers, to the deployment of those models in enterprise systems. And that deployment is called inference. And we see that opportunity as potentially double the size of the training opportunity. And at our company, we feel we were built for this moment.
Has that happened faster than everybody anticipated? Because I do feel like the conversation, although we've been talking about AI now, almost 2.5 years, well into 2.5 years, but we are now increasingly talking about all of this stuff starting to be put to work.
Right. You can certainly see organizations, we have 10,000 customers across the world moving from proof of concepts into production systems and applications of the technology.
One of the things I think we're curious about is, as you know, the news flow is fast and furious from the White House and out of Washington. And there have been some announcements out of the Trump administration about AI infrastructure initiatives specifically. So I'm curious, Adaire, have you seen any impact of that on your existing properties leasing effort? And I'm curious how you compete with, how does that kind of compete, their program, with your own development program?
Look, we very much welcome the focus that the current administration has on data centers and the importance and the recognition of data centers and their important role in the infrastructure of any economy. And we certainly are looking at, some of the properties that have been, identified as potential for RFPs, and we would choose based on locations that would be accretive to our business, because we're very focused in cities, in metro areas, close to where humans are who will use this technology.
Are you getting pushback from cities and humans who don't necessarily want those data centers near them?
Not hugely. I mean, we're very conscious of the role that we play and, the role that we play with communities where we have data centers. And we're very considered about our approach there.
What makes a good location for a data center? Because it doesn't actually, apart from the construction, it doesn't actually involve that many people to keep it up and running relative to the amount of money that's spent on it and what actually happens in there.
Yeah, it's really interesting because I think, when you think about the operations of a data center, you tend in your mind to go immediately to technicians and technology. But actually, there's a whole series of unsung heroes in the operation of a data center, which are the craftsmen and the tradesmen and women, you know, the plumbers, the electricians, the engineers, who basically keep the internet up and running, you know, through this data center infrastructure.
So difficulties in finding those workers. We've done some reporting about that there's, you know, okay, yay, great, the spend and the build, but there's not enough workers to do it.
So I think, you know, the constraints that the industry are facing are, you know, are around energy and power, around skilled workforce, and then into the supply chain for the equipment that's part and parcel of a data center.
But is that slowing the build that you guys are trying to do and meet that demand?
It is something that you have to actively manage as you are looking to build. You know, for example, in our case, around some of our supply chain portfolio, we've pre-purchased in order to ensure that we can have the delivery dates that we need to bring capacity online.
We talked about the $344 billion that some of the world's largest tech companies are planning to spend when it comes to CapEx. It's like the thing we look for now quarterly when a company reports results. How much of hyperscalers' CapEx budgets actually flow through your company?
We have a very significant approach on a part of the data center industry that we call co-location, because not all data centers are the same. And so co-location is where enterprise customers, businesses, 60% of the Fortune 500, for instance, would locate their workloads or their machinery with us and in a shared facility. We have a JV structure that works with the hyperscalers to build to suit for the hyperscalers. And so that's how we service the hyperscaler opportunity and maintain that very important partnership that we have with them.
I mean, I guess we're trying to figure out your exposure. I think your top 10 customers represent about 16% of monthly recurring revenue. So your exposure to the hyperscalers is pretty big, right? Is it manageable?
It's manageable. You know, the hyperscalers, for example, when they operate in our retail facilities, they do so because of the connectivity of Equinix. So that's going to be a requirement, you know, for inferencing and for the actual activation of these AI workloads. So it is for us about connectivity. Connectivity is the secret sauce of Equinix as a data center provider.
What do you mean specifically by that? Because I think we can use the word connectivity to mean a lot of different things, certainly in the business world. What does it mean specifically?
For us.
Yeah.
So in our world, it essentially means we're located in 273 data centers right across the planet. Inside those data centers, we have ecosystems of customers, customers whose value chains are connected to each other, and we physically connect them, you know, literally interconnect those customers one to the other. That's the first part of interconnection. So that allows for low latency transactions to happen. Say, for example, on a trading floor, that allows for that to happen in real time.
Instant, yeah.
Right.
Got it.
We're speaking right now with Adaire Fox-Martin, President and CEO of Equinix, joining us here in the Bloomberg Businessweek studio. You mentioned the difference between training and inference. Thank you. When you think about this, like a company like CoreWeave, for example, where does that fit into this?
Well, CoreWeave is a neo cloud. They're a company you know, that provides GPU capability to companies who want to train their models. So they fit into the ecosystem in the same way for us as other cloud
like a GPU
will.
as a service.
Correct.
Okay, so what are the average lease terms for an agreement with a GPU as a service organization?
It would depend. You know, they can be relatively short. For us, our leasing in our wholesale side is 10 years plus.
Okay.
Now, one of the things that I think is interesting is I think we're all trying to figure out the boom and bust of all this. And today on Bloomberg, there was an investor, Jack Selby. He is AZ VC founder and managing partner. He's longtime managing director of billionaire entrepreneurs Peter Thiel's family office. And he said the euphoria around AI may have led to the biggest bubble yet in private technology investing. And so sounding warning bells that a correction in startup valuations is in the cards. Now, we understand when you throw AI, there's a lot of different players. But behind it all is the data center spend. And we have had a lot of conversations about the hyperscalers making, you know, multiple duplicate arrangements with power providers that they're not going to use all of them, but they just want to make sure they've got the power where they need it. Is there any signs to you that there's exuberance, that the spend is slowing down, will start to slow down maybe next year? You're seeing it. You've got a front row seat.
Yeah. I guess we believe in the enduring nature of the transformation that AI and the technology associated with it can bring to businesses. I mean, as I said, we support manifold workloads of our customers, Not just AI workloads, but, standard business process workloads. And we really are about that being that connectivity engine. So, I think in many ways our business model is somewhat protected from any potential.
Before we let you go, as I mentioned, some headlines on TikTok crossing from the Wall Street Journal. The deal would create a new U.S. entity, Oracle, Andreessen Horowitz, Silver Lake. Are you involved in this at all?
Well, we partner very closely with Oracle, so it would be through that partnership that we would be supporting.
So you think you will support an independent TikTok?
Potentially.
Okay.
With Oracle.
With Oracle.
Yes, a very key partner.
One last question. Your stock's down. Why? If it's so, I mean, I know there's also an incredible spend in what you are doing. You've got to spend in order to meet the demand, and so maybe that is why there isn't some reward from some of your investors. Yeah. Is it kind of a conflict?
We're very focused on long-term value creation for our shareholders, and we announced that we are going to bring on as much capacity in the next 5 years as we have done in the previous 27 years of our operations. And so we're very focused on executing against our strategy. We believe in the opportunity that we see in the market and hope to deliver proof points to that to our investor community very soon.
We have to leave it there. We apologize. There's been a lot going on today, so we hope you will come back and give us updates.
Thank you very much for having me.
We appreciate it. Adaire Fox-Martin, President and CEO of Equinix, joining us right here in studio.
Let's take a look at some stocks on the move today. I'm Tim Stenovec, along with Carol Massar. With us is Bloomberg News equities reporter Alexandra Semenova. Alex, what are you watching?
We, of course, guys, have to start with Oracle because you just mentioned that headline flashing across the Bloomberg terminal of a Wall Street Journal report that says that Oracle, Andreessen Horowitz, and Silver Lake are poised to control TikTok in the U.S. Obviously, this is big news, when there was so much at stake with this deal. This follows news that negotiations over the future of the company are progressing, relieving some of that uncertainty over, some of the key customers in the U.S. President Trump had said that he's scheduled to speak to Chinese President Xi Jinping on Friday, and this was part of the discussions. He said that a framework to keep the app running in the U.S. was reached, and accordingly, the stock is up just a little bit right now, about 0.5%. It was up as much as 5.9% earlier in the day, but also have to mention that it has had an incredible run from its earnings report last week, where it really wowed investors with its guidance, and it's up 83% year to date.
It makes me wonder how this all fits together, because obviously some of this stuff was moving along, I guess we can kind of assume, and I guess they get the secret algorithm to TikTok, or do they not? We don't know.
It seems like it. We don't know. Again, all of this is just based on investor excitement because it was about that guidance when they missed their earnings. And now at this point, we don't really have any confirmation of how exactly they'll be involved. And yet investors seem pretty enthusiastic about it.
United Airline Holdings, 20 seconds. We know Scott Kirby is going to be on Bloomberg TV and radio air later on. Just a quick line on that.
Yeah, we love a micro story that is a macro story. And here he is saying that travel demand is going up and it's showing that the economy is stronger than statistics show. He said that airline demand is a good real-time indicator and they're seeing a lot of people booking for the holiday season. But of course, one thing that he said that stood out to me is the front of the plane, the upper class seats
where Tim
are getting booked out much faster, than economy, which is again a testament to this bifurcation of the economy that we're seeing between higher and lower income consumers.
All right, Stock Movers, funded on Apple, Spotify, or anywhere you get your podcast. That's going to do it for this hour of Bloomberg Businessweek Daily. The close is next.